Monetization. When fiat currency begins to lose its value and purchasing power, individuals seek to monetize alternative assets that maintain value more effectively, using them as a form of money instead. Monetization refers to the process of transforming something into money. In the context of this essay, we define it as the act of utilizing or trading a commodity or asset primarily as a medium of exchange, with its original intended productive purpose becoming of secondary importance. A relevant example in the present day is the residential real estate market in major cities of the United States and Canada. In Canada, the price of residential properties has become so detached from the underlying economy that it demonstrates clear indications of being monetized. Several instances highlight this phenomenon. Over the course of just 6 months, the average price of a home in Canada has increased by $100,000. Even considering an annual median household income of $76,000 in 2020, and assuming consecutive 8% increases from 2020 to 2023, the empty house has surpassed the cumulative earnings of its occupants by 2023, and it is not even June yet. To reiterate, an empty house, on average, generates higher earnings than two individuals engaged in full-time employment during the same period. Canadian and U.S. real estate, on average, preserve value more effectively than fiat currency. Consequently, people invest in real estate to safeguard their wealth, with the act of renting out or residing in these properties becoming a secondary consideration. Whether occupied or vacant, homes appreciate in value. The annual appreciation of the asset is sufficient to offset the foregone rental income. This has resulted in the issue of empty homes in cities like Toronto, prompting the implementation of a special tax to address the problem. Another way to express this concept is that houses increase in price over time, rather than in value. An increase in price signifies that you can sell the house for more dollars than you initially purchased it for, but the proceeds may not be adequate to acquire a substantially similar house in a comparable neighborhood. If the house were to appreciate in value, it would enable you to purchase a larger or more desirable house within a similar locality. When a house only rises in dollar terms, it typically maintains the original purchasing power of your dollars, without granting you additional purchasing power. Monetization permissions. In order to promote the monetization of specific assets, while discouraging others, modern economies establish incentives and regulatory frameworks. Presently, countries like Canada and the US are structured to favor the monetization of three key asset classes: government bonds, local stock market, local real estate. Conversely, the monetization of other assets, such as gold and Bitcoin, is not given the same level of preference. This deliberate decision is driven by strategic objectives. The primary goal is to prioritize the monetization of assets that contribute to the government's stability and maintain control over certain resources, while inhibiting the monetization of assets that may not be considered strategically important for the same purposes. Let's delve into each monetized asset class and the rationale behind them. Monetized Asset 1. Government bonds. Following the U.S. departure from the gold standard in 1971, a significant narrative challenge arose. As gold is a widely recognized monetized commodity, any increase in its price, denominated in US dollars, implied that individuals were choosing to store their wealth in gold rather than in US dollars. Such a scenario undermines trust in the US dollar, as it suggests a decline in its value. Similarly, if Bitcoin's price were to rise significantly, it would also signal a lack of confidence in the US dollar. To address this challenge, the U.S. government aimed to ensure that central banks worldwide would monetize a different asset for their reserves. It orchestrated an agreement whereby major oil exporting nations would price and sell their oil in U.S. dollars and invest their surplus U.S. dollar savings in U.S. government bonds. This arrangement provided these countries with military protection from the U.S. and maintained stability in the region. Similarly, the U.S. entered into a trade agreement with China, granting access to its consumer market in exchange for China using its excess savings from exports to invest in U.S. government bonds. A considerable number of U.S.-aligned countries can be observed as major holders of U.S. treasuries among various central banks. Additionally, the U.S. implemented local regulations mandating domestic banks to invest client deposits into U.S. government bonds. Consequently, central bank gold reserves declined from the mid-1960s until 2009. While the amount of U.S. government debt held by foreign central banks skyrocketed during the same period. When the general public questions the strong performance of U.S. government bonds, responses may range from asserting the U.S. as the world's strongest economy to emphasizing trust in the United States of America and its military. This deliberate selection of monetized assets aligns with the overarching objective of governments to prioritize specific resources and maintain control over their monetary systems. The stock market. Governments prioritize the monetization of their local stock markets for strategic reasons. Here are the key factors. Firstly, local pension and retirement programs heavily rely on increasing stock prices. To encourage this, governments offer tax-sheltered options for local investors to invest in the local stock markets. This ensures a growing number of contributors over time. An active stock market enables capital formation and provides local companies with access to capital for growth. This benefits the country by allowing companies to invest and create more jobs, which in turn contributes to the health of the local stock market. By promoting participation from local investors, governments enhance the liquidity in the market, attracting participants and investors from global markets. The combination of deep liquidity, fast price discovery, and secure property rights compels global investors to participate in the U.S. market. In summary, a thriving stock market keeps local investors and companies satisfied. This leads to content voters, as happy investors and companies contribute to a positive economic outlook. Moreover, when questioned about the upward movement of stock prices, a patriotic response can be given, such as because U.S. companies lead every industry or because there's a premium to listing in the U.S. stock market. This deflects attention from the weakening U.S. dollar and portrays a stronger narrative. Monetized asset 3, real estate. As seen in the previous example, real estate is a monetized asset class in the U.S., Canada, and other developed countries. Governments allow this for strategic reasons as well. Firstly, monetizing real estate leads to increased consumption of properties. Consequently, demand for real estate construction rises, creating jobs at various levels throughout the economy. By incentivizing home ownership among citizens and facilitating continued monetization of the asset class, the government enables property owners to accumulate wealth, which can later be reinvested in the economy, representing the proverbial American dream. Lastly, the socially acceptable explanation for rising real estate prices serves the government's image positively. The belief that land is limited, particularly in Canada and United Kingdom, and that housing supply can't keep up with population growth are commonly accepted reasons for the upward trajectory of real estate prices. However, it is worth noting that these explanations can be viewed as amusing. For instance, the Canadian money supply has increased by approximately 34% since early 2020, while the average price of detached properties in Toronto has risen by 31% during the pandemic. Yet, stating that your house is increasing in value because of high demand for Canada sounds far more appealing than admitting that no actual new wealth has been generated, and the value increase is due to a 30% rise in printed currency. The former response helps secure re-election, while the latter undermines credibility. In conclusion, the actions taken by governments are often driven by their desire to secure re-election. This necessitates their ability to control the narrative and leverage valuable assets. The assets they prioritize for monetization are those that align with a positive government narrative. However, the main challenge governments face when allowing the monetization of assets like gold or Bitcoin is the violation of their narrative. The government struggles to explain the increasing prices of these assets in a way that reflects positively on their management. In reality, the rising prices of Bitcoin and gold indicate a devaluation of the underlying assets or currency. This situation exposes the government's shortcomings in effectively managing the economy. It's important to recognize that accumulating more Bitcoin or gold does not contribute to alleviating the government's debt, propping up artificial real estate markets, or addressing unsustainable pension liabilities. Instead, holding Bitcoin offers individuals, including millions worldwide, the opportunity to opt out of traditional systems. It provides a means to safeguard the value of our savings from the pitfalls of monetary mismanagement. Moreover, it cultivates an independent voter base characterized by critical thinking, capable of holding the government accountable. With the increasing number of Bitcoiners, society moves closer to a future marked by transparency. People should not be deceived into conforming to the government's desires. Instead, we should all be educated about how the system operates and empowered to actively improve it. Bitcoin represents a significant step forward in achieving such a future. Thanks for watching.